Our historical returns feature helps illustrate the relationship between a metric and a stock's return over the past 12 months. We can measure this relationship using stocks from a particular industry, peers of a stock, your own watch list, and individual stocks. Let's start the analysis using revenue growth over the past year. We can use a set of metrics and cutoff criteria to differentiate between low and high-performing stocks. You can modify the selection criteria using the greater and less than signs, changing the cutoff value directly, and moving the cutoff line. The scatter plot can be rescaled using the min and max filters. When updating the cutoff criteria to find better returns, there should always be a reasonable number of data points within the criteria in order to find a trend, rather than a small group of outliers. Additional metrics can be added to make the cutoff criteria more specific. By adding net income and changing its cutoff value to less than or equal to 0, companies now need to be unprofitable and have revenue growth greater than 30% to meet the criteria. This allows us to find a set of stocks that have had returns that exceed those of either individual metric. Once you have found criteria that produce good historical returns, you can use this to search for companies using our Rank Stocks tool.